Let's also bring in our guest on the show, Sorbh Gupta of Quantum Mutual Fund. He's joining us this afternoon. Sorbh, thanks very much for taking out the time. Any big changes that you're making to the portfolio that you would recommend making to the portfolio right now, keeping in mind that some stocks have indeed corrected and therefore there could be value in entering them?
Yes, so we being value managers, we have been in lookout for stocks over the last year and a half, and we have got some picks, but they're yet to move. So what we've seen in this rally over last 6 months, 8 months is that there has been a clear polarization in the markets where expensive stocks have moved toward being more expensive. The value where we find value, they are yet to move. So we're waiting for the catalyst to play out, but yes, this is a market where broader markets have not yet to move, and the narrow market and the polarized few names are going up. So there are opportunities to pick up on the broader market side. So we have been picking a few.
You think that this is going to be the next leg of where the leadership is going to come from, which is the mid caps and the small caps? That story is going to play out better than the large cap, which has been the theme of 2019. The theme of 2020 could be the excitement around the broader market space.
Yeah, so what we are trying to say here is that yes, as the economy improves, and if it improves, the economic recovery will be broad based, and some of the stocks which are beaten down but have catalyst as strong names should start to improve performances and should do better than the expensive names which have been very expensive because flight to safety, so-called flight to safety. So our broad sense is that those are the stocks which have been beaten down but have some catalyst in them, are good businesses, should start to move from here, and we've already seen that started to happen.
Sorbh, good afternoon. There is a clutch of these capital market related plays that have started a next wave of up moves. So we've seen brokerage names do well. We've seen the AMC stocks doing very well. Wealth management or whatever is present out there is doing extremely well for itself too. What do you think? Is there merit in trying to own or enter into this pocket?
Yes, definitely. These are good businesses, and not many of these companies are listed. They have long way to go. If you look at penetration ratios of equity exposures of Indian individuals or households vis-a-vis global peers, there's a lot of opportunity in these businesses, specifically AMC or insurance companies. But the only factor is that what are they factoring right now? If they're trading at like 25-30% as a percentage to their AUM, we believe that they are already factoring a lot of good news. So better wait for a good value to get into those names. We like the business. They are good operating leverage businesses and good opportunity size. If you can see that Indian households from their savings put just 7 to 8% into equities right now. And this trend is going to increase more and more as people understand equities and try to generate more returns out of equities. But then what is the stocks factoring in, that needs to be taken into consideration. And whenever somebody feels a valuation comfort, definitely these are the names one could own.
Okay. There are conflicting reports about what's happening with regards to discretionary consumption, and autos is right up there when it comes to that. Some research is suggesting that the inventory cleanup is a lot more quicker than what was otherwise anticipated, and there is equal dissent on the other side too. What has been your research like? What is it that you guys are doing at Quantum?
So we have a decent exposure in consumer discretionary, specifically autos and two-wheelers, and we believe that these companies are here to stay. So in terms of inventory, so look, there are multiple factors here. One is the general slowdown which the economy is seeing. Second is the transition to Bharat 6, which will increase the prices, and after 31st March they won't be able to sell their inventories. So that is their bottleneck. So they're trying to reduce inventories right from here on and trying to increase the Bharat 6 inventory from here on. So there are multiple factors at play. The one jury is out is that there is no pre-buying. That is very, very clear, which most people expected that there will be pre-buying. That is not happening. We also expected there will be pre-buying, but definitely that is not happening. But the good part of not having a pre-buying is that there will be no post-transition dip which was expected in Q1. So prices are increasing by 5 to 6% in across the models for most of the companies. And so we have to see two things. One, their ability to take that price hike to pass on that increased cost because of Bharat 6. That is one. And second, once this whole regulatory thing goes out of the window, then the clear picture will emerge where what is the situation of inventory, how is the demand and other things. So there are multiple factors here playing around. But if you look at company specifics, some of these companies are trading at very, very attractive valuations of 10, 11 times 1 year or 2 year forward earnings. They're generating a lot of cash, and their ROEs are extremely decent. Their market positioning has not been hampered. They're extremely well positioned in the market. Some of them are market leaders. So we believe that they're great businesses. These transition times are times where you can get these stocks at great valuations and hold there for your long-term investing. So we continue to keep faith on these businesses.
Okay. Any specific theme, Sorbh, that's most likely to be a multi-bagger of sorts? I mean, and obviously that can probably be something from the mid-cap arena. We've been talking a whole lot about whether or not the turnaround in real estate was going to happen or no. Now the hot pot is specialty chemicals, the digital businesses, and all of those other, even for that matter, some of the smaller IT names are active. What is your assessment of the theme that could be a multi-bagger theme for the rest of the year?
No, so multi-bagger for the rest of the year is a thing that which is more of a dream rather than reality, having a multi-bagger within a year. But what we consider as a great combination is a large opportunity size, great management to execute, and a great valuation, combination of all three. And if you look at some of these companies like NBFC, which was darling of the markets about 2 years ago, they have been hammered. And some of these businesses are extremely good and available at great valuations with great management. So this is one pocket where you will find a good name which can give you decent returns over periods of time. I'm not talking about this remaining year, but definitely more than a year view, because one should take a longer term view while investing in equity markets. That is one pocket that one should look at. Then, as you talked about these internet companies which are slowly getting listed, a few of them, tremendous opportunity size, great growth, and definitely valuations are expensive, but we are also doing our research whether what kind of valuations or what kind of premium we can pay to that kind of growth and large opportunity size. So that is second pocket. And thirdly, definitely this transition of auto companies towards electric, that whole basket now opens up in terms of not owning some of the auto ancillaries and owning some of them which have focused towards these kind of newer technologies and transition. So these are the pockets where investors should focus, but definitely it will be difficult for me to recommend any multi-bagger within a year, but these are the themes one should look at, and they could definitely find good management with great businesses at great valuations for next 2-3 years.
Okay, Sorbh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thank you.